Hey, good day, everyone. Welcome to the Bert Salazar Show. My name is Bert Salazar, and I'm going to be your host today. This is episode 192, so we've been doing this for quite a few years now. And today we're going to be talking about IRS notices that you may be receiving from the IRS from time to time. So, some are going to be more critical than others, and I'm going to be providing you with a link to an ebook I just wrote, which deals with the top 10 IRS notices to watch out for. But I'm not going to go through all top 10 on this short video. I'm just going to cover the top six of them, anyways. But um, before we move forward into the notices and the letters that the IRS sends on a regular basis, I want to kind of cover with you some of the misconceptions that many of my clients bring to the table when I visit with them, for the first time in regards to some of the notices that they're receiving. The first one is, most Americans feel that the IRS debt is going to go away. So if they sent you a letter and is putting you on notice, you owe them some money. A lot of Americans, and this is sad that happens, they just set it aside and they hope that is going to go away. Well, the IRS notices and the debt that you have with the IRS is not going to go away. Now, obviously, we have already talked about the 10-year statutory window that the IRS has, but as you get closer and closer to that year, to that 10-year rule, the IRS is going to get a lot more aggressive along those lines. So your IRS debt is not going to go away, so you're going to have to do something about that. And the best thing that you can do is, first of all, identify what the debt is, and number two, make sure that you seek assistance from a financial professional or a tax professional that specializes in tax planning and tax resolution planning along the way, because it's very critical for you to address it. And the sooner that you start to addressing the IRS debt, the cheaper it's going to be because the clock is ticking. You have penalties and you have interest that you're making on that debt that the IRS is charging you on that debt, and eventually they're going to collect on all of it. So if you get a notice from the IRS, please pay attention to it right away. The second misconception is that the IRS is not willing to work with taxpayers, and that's a far-fetched misconception because indeed the IRS is willing to work with you. Now you have to understand, what type of debt do you have? What are some of the avenue and the resources that you may have available to negotiate with the IRS? And once again, can you try to do it by yourself? Sure, you could. But that's like bringing a knife to a gunfight. Your chances are you're not going to win, or you're not going to be able to maximize the return on that negotiation because you don't know the rules of engagement. So I always recommend to all of my listeners to make certain that you seek a tax professional that can help you minimize your tax liability while maximizing your benefits under the IRS code. So it's important to know that. But the IRS has a number of programs that they can use in order to alleviate your pain. And they're willing to help. They're willing to help because they want to get you back into the system, paying your taxes on a timely basis, and they're willing to go the extra mile for you. But you need to know what kind of race you're running before you move forward in trying or attempting to deal with the IRS. The third misconception that I want to share with you today, and there are many others, but these are the top three that come across my desk on a regular basis, is that bankruptcy is gonna kind of discharge all of your IRS debt. And although bankruptcy can help you on some debt, more than likely your IRS debt is not going to go away in bankruptcy. Now, there are certain statutes of limitations that you need to use if you're going to file bankruptcy. So you need to either talk to a tax professional, an enrolled agent that specializes in tax resolution planning with the IRS, or a tax attorney. But most of the time, when I have clients come to me because they file bankruptcy, And then they said, Bert, I filed bankruptcy. I got a full discharge, and I just got this notice from the IRS that I still owe them, all of this money. It could be $100,000, $200,000, or whatever it may be. Why didn't this go away? Well, there are some reasons why it didn't go away, and there are some statutes that were applicable to your bankruptcy that had nothing to do with the CSET, which is, the one that the IRS applies as far as being able to. It's a collection statute, a statute expiration date, better known as CSET, which is different than the one for bankruptcy. So make certain that you understand the difference between the two. And if you're contemplating filing bankruptcy, make certain that you speak to either an enrolled agent or a tax attorney or a bankruptcy attorney that can better guide you as to what percentage of that debt may actually go away, if any percentage of it is going to go away. So it's important that you understand that. All right. So let's get into the top IRS notices that most of you are going to be seeing from time to time if you owe money to the IRS. Now, you may get notices like you'll see here, that have nothing to do with any back debt or anything along those lines. But then again, these are the type of notices that the IRS is going to share with you when they feel that something is needed on your individual tax return or your individual tax account with the IRS. The first one is what is known as a CP 2000 notice. And this is one that the IRS sends when there's a discrepancy between the amount of revenue or income that you reported in your tax return versus the information that the IRS receives from third parties. So it could be something as simple that you file your tax returns and you fail to include a 1099 that either you received and misplaced, or you never received from the company that issued the 1099, but that company, when they issue the 1099, they send a copy to the IRS as well. So it could be a discrepancy of a few dollars or a few $1,000s. And the best thing that you can do along those lines is make certain that you call the IRS right away and find out what it is all about, what the debt is all about. Although you'll have in that CP 2000 enough information to determine what it is, but then you can always call the IRS and see how you can resolve it. Once again, if you're dealing with a tax professional, it's going to make your life a lot easier, because trying to get a hold of someone, an IRS agent, could take you hours to be able to do that as a regular U.S. citizen or as a regular resident of the U.S. versus a tax professional that has an IRS practitioner tax line that makes it a lot easier for them to reach out to the IRS. So pay attention to the CP 2000. Don't let it go away, because it's not going to go away. Make certain that you resolve it right away. The second one is called a CP 501, which is a reminder of unpaid taxes. So if you file your taxes for the previous year and you didn't have the money to be able to pay your tax liability, and you just send a tax return in without sending any money with it, then obviously now you have a tax liability that is owed to the IRS, and obviously there are going to be interest and payments assigned to that as well. So you're going to be receiving that letter from the IRS at CP 501, letting you know that, listen, you have a debt with the IRS, and you might as well start getting it resolved at this point in time. The third one is called a CP 3219A, which is a statutory notice of deficiency. And this usually happens when the IRS randomly does an audit on your tax return and they see some issues there. Now, it could be something as simple as they disregarded some of the credits that you submitted with your tax return, or your exemptions that you submitted with the tax return, or perhaps it was an underpayment of a tax liability. You underreported your income to the IRS, and the IRS is letting you know. Now, when you underreport income to the IRS, if you did that by mistake, that's something that you can resolve and it should be resolved as soon as possible. But sometimes unreported income, depending on the amount of income that you have underreported, that can become a fraudulent situation. And that's something that you don't want to deal with when it comes to the IRS code. So make certain that if you get one of those letters, that you again contact a tax professional so he or she can help you as best as possible with that issue. The next one, number 5, would be the CP90 and the CP297. And this is primarily a final notice of intent to let. The IRS government, they have the nuclear codes, and if you get close to a nuclear war, they have something that they call a DEFCON system. So you go from DEFCON 5 all the way to DEFCON 1. DEFCON 1 basically means that nuclear war is imminent. Well, think of your CP90 and the CP297 as your IRS DEFCON 1 for you. They're giving you a final notice for you to comply, for you to pay your taxes, or to negotiate with them, because if you don't, they're going to start to levy your assets, and that's not something that you want to deal with, because with that notice also comes what they call a CDP hearing information, which is your collection due process. So you do have the right to take that to a hearing, so the IRS can hear your side of the story. And that's something that you really need to act upon it right away, because you're going to have a window of opportunity. They're going to give you 30 days. They're going to give you 45 days, depending on what it is, in order for you to rectify it. Because if you don't, they're going to start the levy process. And the levy is going to be a very critical one, because they're going to levy your wages. They're going to they could levy your Social Security benefits. They can levy your property. That may include your assets, and that could be your personal and your business assets along the way. So this is one that is a DEFCON 1 all the way. So make certain that, once again, if you get one of these letters, or you get a hold of your tax professional, and that you immediately act upon it, and he or she can help you in navigating this challenging issue with the IRS. And then the final that I want to talk to you about today is what is known as a CP 523, which is the intent to terminate an installment agreement. So let's say that you owe taxes a couple of years ago, and you entered into an installment agreement with the IRS. You signed a document because the IRS is giving you the opportunity to pay your debt over time, and you had agreed to follow certain guidelines in order to pay your debt. Now, if something goes wrong, you haven't been able to pay your debt, the IRS has not been able to take money out of your account to satisfy that installment agreement, they'll send you a letter, and they'll say, look, we're about to disregard this installment agreement, and then we may move directly to intent to levy. So it's important that when you sign an installment agreement with the IRS, that you understand the rules of engagement, because if you don't, then chances are a year from now, 2 years from now, you're going to find yourself in a situation where they're going to disregard the whole thing, and then obviously penalties and interest is going to be added to that as well, on top of whatever they're adding already. So that's going to be a major challenge for you. So at the end of the day, what I'm trying to tell you with this short video is that if you get a letter from the IRS, if you get a love letter from the IRS, make certain that you act upon it right away, because number one, it's not going to go away. Number two, the clock is ticking, because you have interest and penalties being assigned to it and charged to it. And number three, if you don't act upon it, then you may very well take your case to a DEFCON 1 scenario, and that's something that you don't want. By the way, if you like the information that I have just shared with you, please hit like. And also feel free to subscribe. So whenever I put a video, which I do one every single week, that you'll have access to the information. And if you can share, that we would appreciate that tremendously. I would appreciate it tremendously because it will allow us to continue to, grow our channel. And there's also going to be a link to an ebook, to the ebook that I discussed with you on the top 10 IRS notices to watch for. And as I always say, and I always tell my clients that my goal is to kind of help you change in the way that you see things. Because when you change the way that you see things, not only for yourself, but also for your business, the things that you see change. So once again, thank you so much for giving me a few minutes of your time today, and I'll talk to you soon. Thank you so much. Take care and have a wonderful day.